Good morning, traders. It's Carlo from Blueberry with the week ahead. It is Monday, the 10th of August, and what is hot right now? Well, the US-Iranian war continues to enter its 25th week. The RBA meets this week, and gold price has hit a 7-week high. So what has happened to cause a gold price to move higher like this? Well, it was in non-farm payrolls data on Friday. We saw a negative 23,000 jobs against forecasts of $80,000 gain. That's quite a big miss. And what that means is that the odds of a September rate hike in the United States have fallen sharply. So the odds are about 45% of a rate hike in the United States. Now that's had a huge impact on the US dollar. As you can imagine, the US dollar dropped against everything. Gold, in effect, jumped to 43.60. On the back of that, equities liked it as well, with softer employment growth, negative. So equities such as S&P 500 and Dow 30, very close to new record highs. And the dollar yen as well too had a crack lower. There was talk of intervention as well in the dollar yen, but at the moment it's just a little bit stubborn. Dollar yen is not really falling as much as the Bank of Japan would have hoped. Let's quickly look at the charts. I've got the gold daily chart in front of me here. You can see how the gold price has held quite well in that band between 3,900 and 4,045, and it's bounced many times. And of course, we've seen a huge jump in the last 3-4 trading days due to a weaker US dollar and weaker jobs number, for example, on Friday. We move to one of the key currency pairs, dollar yen on the dailies. You can see here after that huge drop last week on reported intervention by the Bank of Japan, we did see weaker non-farm payrolls data, so one would expect that the US dollar should weaken. It tried, but it's still holding around that 157.90 for the moment. But stay tuned for the next few trading sessions this week to see if the Bank of Japan does come in once again. And don't forget, early part of this week is a Japanese holiday, so it may be a little bit more volatile and illiquid for traders trading the dollar-yen pair. And we move to the Dow Jones 30. Just want to pick one of the US equity indices. As you can see there, the Dow's around 54,000, very close to new record highs. Given that the markets have repriced their thinking of Fed rate hikes in September and beyond. Now it's less than 50% chance of a rate hike. Let's move to the key data for the week ahead. So this week, traders will be focusing on the continuing US-Iranian conflict, in particular whether the Strait of Hormuz will open up to freight traffic. On Tuesday, the Reserve Bank of Australia does meet. The consensus is for no change, 4.35% cash rate. We have seen the quarterly inflation number a few weeks ago peak and decline. And we have seen a couple of the banks actually reduce some of their variable interest rates in Australia. So at this stage, rates are on hold from the Reserve Bank. Then we move to Wednesday. We've got German CPI coming in around about 2.8% expectations. The ECB is on hold there on rates. We see probably the key event this week in terms of data, and that is US CPI. Wednesday, CPI is expected to fall a little bit on an annualized basis of 3.4%. So that, as well as a recent non-farm payrolls data, gives the Federal Reserve some kind of confidence to remain on hold on rates and perhaps even cut rates at some stage this year if the data continues to show a drop in inflation and certainly weaker employment growth. But that remains to be seen. On Thursday, we have UK GDP. It's expected to bounce to 1.6% annualized from 0.9%. Thursday, we have the US PPI data come out on a monthly basis. It's expected to bounce back to 0.2% from a negative, but all eyes, as mentioned, will be on the US CPI data on Wednesday, as mentioned before. Friday, we do have some key New Zealand data, business PMI coming in at 58.4, so the economy there is a little bit sluggish. They have had a rate hike recently, but it's quite a small economy, so it changes very rapidly. And then to finish off the week on Friday, we've got US retail sales, 0.1% expected, and then Canadian wholesale sales, 2.7% expected from a previous reading of 0. So again, that's a summary for this week. It's more about US-Iranian continuing conflict and also to see what the US dollar can do. Will the Bank of Japan come in and smack that dollar yen? And will gold and other commodities continue higher with continued US weakness? They're the questions that need to be answered. I wish you well with the trading. Good luck, and I'll see you in the next video. Bye for now.